Medical Properties Trust just announced another dividend cut during their earnings they just released. And of course, this is huge news. They reported a revenue of 266 million that slightly beats the analysis estimations, but missed on EPS big time. And it seems that people like the news, since the stock is up 2.4% as of recording this video. So without further ado, let's dive in these earnings. MPW reported a net loss of $0.54 and an NFFO of $0.23 on a per share basis. One of the most important news for most people was of course the dividend that was cut from $0.15 to $0.08. And this is of course looking pretty bad for the people that are investing in MPW for the dividends. Looking at the revenue, we see that this is decreasing big time year over year. Last year's revenue was reported at 337 million. And right now they reported only 266 million. The good part here is that expenses are decreasing. But down the line, this is still resulting in a net loss, which of course is a big red flag for me right now, since the future of this company is at stake, and so are the dividends of course. The normalized funds from operations was reported at $0.23 per share, which is the good part here. But keep in mind, this is more than halved year over year. So it's at a positive number, but it is still looking really bad for MPW. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. MPW is a 2.7 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. And right now it is sitting at almost 22, indicating they might be massively overvalued. Later in this video, I will show you my 3 price targets for MPW stock, so make sure to watch until the end. Because price to FFO is only telling a small part of the full story here, and this price target might really surprise you. And if you're interested in stocks that I do like at this moment, make sure to watch the video suggested right here. Revenue is at 1.48 billion, and in this graph we see that revenue used to go up, but it is coming down big time lately. And the earnings that were just released aren't even processed in this graph, so it continues to go down from here. We see that margins are also going down big time most recently, and this is not looking any good. Both the operating margin and net margin are at a negative right now. So the question is, how long can MPW survive in this situation? EPS is going up in the long run. It is not really steady and consistent, but that is very common for REITs. However, the most recent decrease is something that of course worries me a lot. Analysis expected that in the coming years EPS will go to $0.35 per share, with of course big problems in 2024 and recovery in 2025. However, from 2026 on it is again expected to decrease. For the revenue it is not looking any better, with the analysis expecting almost no growth on average. The company is expected to have a revenue of 1.13 billion in 2028, which is only a 10% increase versus 2024. Return on assets is sitting at -8, which is a bad number. Return on equity is also looking really bad, and the most important number, return on invested capital, is sitting at 0.37%, which is a low number. And it is also lower versus the 5-year average, so that is also something that I don't like. Current ratio is at 3.10, which is a high number even for a REIT, so keep an eye on this number since it is increasing. Right now, MPW has 10 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. MPW has 224 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. And to be honest, this surprised me a little bit. Shares outstanding are increasing, which is of course very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, this is where things get interesting. MPW is known for paying a dividend yield around 15% historically. Last quarter they cut the dividend big time, and today they announced yet another dividend cut. So the dividend stats that we are seeing here are not fully correct. If we assume that today's announced dividend of $0.08 is the dividend moving forward, we get a dividend yield of 6.7%, which is still a pretty nice number. But for all the risks that are attached and some big dividend cuts previously, you might ask yourself if that's worth the investment. Looking at the dividend estimates, we see that it is expected to go down even more from this point on. So be warned, it is not looking any good for this company and their dividends. And with that being said, how about the historical returns? Was there any value in holding MPW over the past couple of years? I decided to compare MPW stock with the overall market, in this case the S&P 500. On the 5-year chart we see that MPW underperformed the S&P 500 big time, with a minus 62% return including dividends. The S&P 500 is sitting at 95% return. On the 1-year chart it looks pretty similar, with MPW sitting at a minus 49% return. The S&P 500 is sitting at a 17% return. On the 6-month chart it is getting pretty interesting, with 37% return for MPW, while the S&P 500 is sitting at 5%, so they were capable of finally beating the S&P 500. On the 1-month chart it is again MPW that is beating the S&P 500 big time, with a 13% return versus minus 4% for the S&P 500. So bottom line, MPW underperformed the S&P 500 long term, but in the short run they are catching some momentum here. So could this be the perfect time to buy MPW stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 0, 2 and 4%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm filling in 12, 14 and 16%. And for the free cash flow margin, I'm putting in 52, 54 and 56%. For the PE ratio, I'm putting in 20, and for the price of free cash flow, I'm putting in 5, 6 and 7. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. And right now MPW stock is at $4.8. I hit analyze, and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $4.13. We have a mid price target of roughly $5, and we have a high price target of $6. And to me, the low to mid price target is the most justified here, indicating that this stock is overvalued based on these numbers. What do you think is the most justified price target? Let me know in the comments down below. My final conclusion on MPW is that this is yet another warning. Dividends are getting cut, and maybe soon there will be a dividend cut to 0. I've been warning people really a lot about this company. It is just not worth the risk. So please be careful when you decide to invest in this company. There is a lot of debt, revenue is declining big time, and margins don't look good either. The only thing I do like is the current free cash flow growth. But there are better companies out there that have some of the same free cash flow growth. So it doesn't feel like a justified reason to buy this stock. For now, I keep skipping this stock and I will closely monitor the dividend situation. If you're interested in the stock that I do like at this moment, make sure to watch the video suggested right here. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.